Hi everyone and welcome back to another video of Financial Impulse. So in today's video I am going to give you 6 simple rules which will make you a better trader slash investor. I know each and every one of us try to make profits in the market. We always keep looking for multi-bagger stocks. We look for stocks which will give us good return, but how many of us actually succeed? If you will check the statistics, you will see that more than 90% of the people make losses in stock market. And if they would have followed few simple rules, or you can say guidelines, then they could have prevented those losses. So I am going to sum it up into 6 simple rules which will definitely make you better in your journey of trading and investment. And these rules are given by none other than the legendary investor slash trader Stan Weinstein, and these rules are mentioned in this book. And in my last video in my other channel Financial Affairs, I gave you the link of the book. You can definitely go through it. I will definitely recommend that you study this book. This is a very important book if you want to be a successful trader or investor, and it will definitely help you change your mindset, how you look towards the market. Okay, so without any further delay, let us start with the rules. Okay, so I'm going to call out the rules, read the rules, explain you the theory, and whenever required I will show you on the chat as well. Okay, so what is the first rule? The first rule that Stan Weinstein has shared with us is that never buy or sell a stock without checking the chart. So this rule is extremely essential, and I know more than 90% of the people do not do it, but it's a must do thing for any trader or investor. Why is that? Let me take you to the screen and immediately show you with one example. Again, we'll come back to the next point for better understanding. Okay, so this is the chart of Nifty. Okay, first of all I'm going to give you a simple example so that you understand. Okay, let me take the example of Ola Electric share. Okay, so let's say you got the advice that you should invest in Ola Electric for some reason, and you do not know how to do the fundamental analysis. You have not checked if it is in profit or loss or anything. You haven't checked. But if you follow the first rule, do not invest in a stock without checking the chart, then you could have prevented the losses that you are going to make when you buy the stock. Why is that? You can see this is the weekly chart, and you can clearly see the stock is in strong downtrend. Let me add a moving average. Okay, this is the 30 weeks moving average, and if I add the 10 weeks moving average also, you can clearly see that this 10 weeks moving average is continuously going downwards, and stock is not able to turn this moving average in the upward direction like this. Okay, once it turns in the upward direction and starts using it as support, then we can say that the stock is actually going up and it's a good time to invest in. But that never happened actually. Okay, it continuously kept going down, and this is the 50 days moving average. If I simplify this, open the daily chart, this is a daily chart, and enabling 50 days moving average, you can see consistently the stock has been going down and down. It is acting as resistance. This 50 days moving average is acting as resistance. So now you tell me, would you have invested or bought this stock if you would have checked the chart? Okay, obviously no. If you are a wise investor, you will definitely ignore this stock. Okay, so that is the beauty of reading the chart. So the first rule would have definitely prevented you from this stock, which is not at all investment for the even till now. It is in strong downtrend. Okay, do not worry, we'll again use this stocks example in the next few next points, and you will get to know why. Okay, so that was the first one. The second rule is that never buy a stock when good news comes out, especially if the chart shows a significant advance prior to the news release. And let me take you to the chart again. I would like to highlight one more point here. Okay, so this is Ola Electric, and you can go back to the news, or you can see if you go to August or September, late August or September, and search articles or news related to Ola Electric, then definitely you will find some good news. Okay, maybe it is about to launch a bike, or it has developed some technology, whatever it is. Okay, I'm not being very specific, but you will definitely find positive news regarding Ola Electric during this point. Okay, and when you listen to a good news, you see the advance, but then you decide that yes, this is a good time to buy because obviously in future it is going to make profit, then that you should not do. You should stop, because you should always see the larger trend, and in order for the stock to go up a little bit, it needs some good news. You see, if you check this time also, let me just highlight and find out which period is that. November 2024 to December. Okay, last week of November, 2 weeks. You can go and check. You will definitely find some good news as well. And those are the catalyst which helps to push the stock price in the upward direction. But that does not make it investment worthy at that particular time. Remember that. Okay, it is just a temporary move. It needs to form a solid base before it becomes investment worthy. Solid base like this. Let's say it is in downtrend. Okay, and here it is. After the good news, it came up. Okay, this came up. Then if it forms a base and does not go below a particular point, then that is the base. Okay, and then you will see it will form a base and give a breakout, and this is the place where you should enter. Okay, that never happened with Ola. It kept giving good news. Okay, it kept going up. Then it has recently, in fact last week itself, it has formed a new low, 35.5. It has never traded below this 38 level, I think, but now it has gone to 35.50 level, obviously in strong downtrend. Okay, and you should avoid buying or selling stocks in good news. Okay, that was the second point. Okay, now the third point, never buy a stock because it appears cheap. Okay, after getting smashed, when it sells off further, you will find out that the cheap can become far cheaper. Okay, so here also again we can take the example of this stock, Ola Electric. So many people would have bought this stock here. Okay, you see, let me give you a practical thing. When Ola got listed, immediately in 2 to 3 weeks it became a multi-bagger. You can see here the price is 75. Okay, and in that week also it closed in 91. The next week it closed at 132. So 75 to 132, and again after one more week it came to a high of 158. That means 75 to 158, obviously a multi-bagger in 3 weeks just. Okay, then people will obviously think that we have missed this opportunity. Okay, we have missed this opportunity and we should have actually invested in Ola Electric at this point. But was that the right decision? Again, let's go back to the chart and I'll show you. You can see after it came to this level 158, you can see the collapse. It came down to the level of 67. Now people will start thinking that yes, it was listed in 75. Now I own that stock at 67. So that's a huge discount. I'm making a good profit. And they will be proven right for the next 2 weeks. You see here, it came to 86. Then again it went up to 96. This will even give that thinking a boost. That yes, I was right. Let me invest more. They will invest more at that point. And again, what happened? It turned downwards and came down to a new low of 45. Okay. Here again, people will start thinking we are getting it at 45 because few weeks back it was trading at 96. It's a bargain. It's cheap. But were they correct? Obviously no. They came down again up to 38, 39 level. Okay. And same. Again, after a few weeks, it went up to 59, 60. People will start thinking, okay, it has gone up. We might not buy right now. Let us wait for it to become cheaper. Now, it is at 35. So, do you think people are buying this stock right now? Obviously, yes. They keep doing this. And that is the nature, the psychology of people, okay, who do not understand how to read charts, how to make investment after doing the chart reading, who do not understand. They only make these mistakes, and you can see how serious these mistakes are. And I think reading the chart that Ola Electric will definitely go to at least 30 or maybe 28 level or even below that. It's a rough approximation, but definitely it will go below, go to at least 30 to 32 level for sure. Okay, and still people will buy because they think that it's cheap. Okay, so you should not do that if you want to prevent your losses. Okay, now that was the third point. Now what is the fourth point? Never buy a stock in a downtrend on a chart. Okay, this is a simple fourth point, and I think you are already clear why you should avoid this. Okay, because obviously it's in strong downtrend. Okay, the fourth point, it is already in strong downtrend, and you should definitely avoid stocks like this. Okay, Ola Electric during the downtrend at any given point, which I mentioned just now, like 60 level, 35. Then again 45 level. There were many points where people would have thought we are getting at the cheapest possible price, but again they were proven wrong. Again the stock kept going down, and again their losses kept increasing. So you should definitely avoid buying stocks which are in downtrend. Okay, now that was the fourth point. Let's go to the fifth one. The fifth point tells that never hold a stock that is in a downtrend, no matter how low the price to earning ratio is. Okay, many weeks later and several points lower, you will find out why the stock was going down. Okay, so again we can take the example of this stock Ola Electric. Okay, you can see, let's say you bought the stock somewhere around here, okay, at 92 level. Then in the next few weeks it came down to 79 level. Okay, so what most people do here is that they think that we are getting it at a discount, we'll buy now. So that's a big mistake. You need to understand that it has broken this candle, and that is why the first point is definitely the most important point, that never invest, buy or sell a stock without seeing the chart. Okay, so if you do, you know to do that, then you can set a bar here. Okay, this is the low of this candlestick and the stock has gone below that. So why would you buy at this point? Definitely there is something wrong with the stock. And if you take a look back, you will see that the stock has already been in a downtrend. It came down from 158 level to this 9500 level. Obviously it's in long term downtrend. Why would you buy that? So always take a look back in the chart where it is going, and never hold on to a stock. If you would have purchased it at, let's say, 92, but after hitting the stop loss, it was sold at, let's say, 78 or 79, and again coming to that point, you should always set stop loss. Do not avoid that. Okay, then your loss would have been minimum. Okay, although minimum definition might vary from person to person, because you are losing around 14 rupees per share. Okay, per share 14 rupees. Let's say 100, then obviously 1400 rupees loss. But you will think that I lost 1400. But let's say you are doing the other thing, and you are holding on to the stock, buying at 92. You bought at 92, and with the hope of the stock going up, you are holding on to it. So where is it trading now? 35. So can you imagine the loss? Around 57 rupees. So, and let's say you are buying 100 shares. So instead of 1400 rupees loss, okay, now you are sitting at a loss of around 5700 rupees. So almost 6000 loss. So which one is the wiser step? Obviously you know. Okay, you must sell stocks which are in strong downtrend. Do not keep any exception or favoritism towards the stock, that no, this is my favorite stock and someday it will bounce back. If you check the fundamentals also, that those are also telling us that this stock is not in a good condition. Okay, so definitely behind every downtrend, every stock which is falling from really a high point, there is a story. Always try to figure it out. Okay, so that was the fifth point. Now let's go to the final point. Always be consistent. If you find that you are buying sometimes buying, sometimes selling in practically identical situation, then there is something terribly wrong with your discipline. Okay, this is an obvious thing. Okay, there should always be rules when you are going to buy a stock and when you are going to sell a stock. Okay, let's take the example again here. Okay, so let's say you are buying a stock here, okay, at this point 68 or 69 level for some reason. Okay, and you are proven right, after few weeks, and immediately you get excited and you buy more. Okay, but again it comes down and you have lost a lot of money here. Now similar thing, if you, let's say there is a situation where this happened, okay, this is happening and it is going sideways. Okay, you will say that, let's say you have purchased the stock here, it came up to high this level and again it came here. Now you will say that no, last time I lost the money, let me just sell it here. So your buying and selling prices are same, and you will see after few days that instead of going down, because you sold it in fear, instead of going down, it again went up. Okay, and after few weeks it found a base and went up. Then that is a problem. So if you are buying and selling at identical situations, then obviously it's not the right thing to do. It is okay to make mistakes. Okay, it is okay to make mistakes, but do not get confused where to buy, where to sell. Okay, and just remember the first point, never buy or sell a stock without checking the chart, and that is the most important point, I would say, from the entire 6 points, because everything is based on that only, right? So these are the 6 rules given by Stan Weinstein to help you make a better trader or investment. And from my personal experience, I can clearly say that if you follow these rules only, then it will turn your portfolio from red, no matter how much how big a loss you are sitting at, it will turn it into green, because you will avoid poor quality stocks, buying them at the wrong time. You completely avoid that. Okay, and 70 to 80% of the losses will stop there immediately, and definitely you'll move towards the green territory, the profit territory, after you follow these rules. Okay, so let me know in the comment section if you'd like to add an important point that you have learned from your trading in and investment journey, and I'll definitely learn to like to know about it, and the other viewers will also definitely like to know about it. So if you like the video, please hit the like button, share it with your investors and trader friends. Thank you for watching. I hope this video was helpful. Please hit the like button, and do not forget to subscribe to Financial Impulse. And if you are already a subscriber and finding my videos valuable, consider joining the Financial Impulse community, where you will get more stock analysis posts, and also you will be able to chat with me directly one to one on Discord and ask your queries. Thank you for watching. Bye. Take care. Have a good day.